Hello, everyone. Welcome to the Money Hour Radio, a show where we try to help you grow your money, pay less taxes, and have a beautiful retirement. What could be better than that? This is a show where we talk about the economy and the stock market, bonds, how to cut taxes, estate planning, Social Security interest rates, the Fed. If it has to do with money, we talk about it right here on the Money Hour Radio, and we're going to cut through the noise and focus on what really matters to you and your money. I'm one of your co-hosts, Ben Barzideh. I have my co-host, Matt Nadeau here.
Hey, everybody.
And we are both founding partners and wealth managers at Barzideh and Nadeau Wealth Management, a comprehensive financial planning firm located right here in Barrington and serving the greater Chicagoland area.
And before we start, as always, we want to take a moment, say hi to all of our clients who are listening today. We appreciate the trust that you've all placed in us, and we love every one of you. And we have a great show planned today. I want to get into some topics for some of our long-term listeners from back in the day when we had done this for a decade plus. You know how we manage our money. You may not remember all the details, but we're going to talk about it for all the new listeners, remind all of our long-time listeners about our advance and protect process. It's fascinating, it's unique, what makes us different. And then we're going to keep unpacking some of the estate planning topics, some of the One Big Beautiful Bill Act that we've been talking about, where we go into estate planning, death taxes, all that great stuff.
And by the way, in a couple of weeks, we're going to have Ken Piercy on our show of Piercy & Associates, a very esteemed estate planning firm right here in Barrington. And he's going to go a lot deeper into it, estate planning with us. But just giving a heads up, a couple of weeks from now, we'll have that interview here.
Yeah, great guy. Can't wait to have him on. So we're going to get into it. This week, don't want to say it was like extremely light week for economic news. We actually had two big reports came out with the inflation readings. The CPI readings came in where people were pretty excited. And then we had the PPI readings, which came out terrible, which people are a little nervous about, that could be driving maybe inflationary pressures. We got to keep watching and see what the results are from these. They're mixed results. So we'll let you know when we start getting more insight into that. But in the meantime, we're going to get into how we manage our client investment portfolios at our firm called Advance and Protect.
But before we get into what we invest in, let's start with what we don't invest in. So we generally do not sell or recommend annuities. And we couldn't say that loud enough. Those are, in our opinion, very gimmicky packaged investment products. They often make you stay in them by locking up your money for many years and have these just draconian penalties for getting out early. And that means by the time you realize you made a mistake, it's often too late. I jokingly say that it's kind of like marrying a supermodel. It's great for the first year, and then all of your problems start. And it costs you a lot of money to get out. But
come on, man. Why you got to be hating
in
on all these supermodels?
Unique circumstances, we may recommend them for tax or estate planning purposes, like when we're doing a 1035 exchange, but it's seldom.
It could be useful for some people, but let's be honest. If you're listening to the radio, you've probably heard all of these annuity pitches. It solves all your problems. We just don't agree. So let's actually discuss our process, specifically our actively managed Advance and Protect tactical strategy. And as you know, if you've listened, we monitor our investments every single day. And surprise, we'll actually sell out of the stock market when our research is saying there is a risk of a potential market crash, or it's at least elevated, and we're getting warning signs. So in our view, retirement's not the time to risk riding the market all the way down to the bottom. And you don't want to watch all that hard-earned savings and all your hard-earned money dissipate. So we want to look to sell out before major catastrophic damage is done. And in this process, we actually use very sophisticated research. And it's, a form of technical and quantitative analysis. It helps us gauge the overall risk and health of the market. And to get a little more specific, we have three big broad-based buy and sell indicators for the stock market. And each one analyzes risk and demand in its own unique way. And if we want to kind of keep it loosey-goosey, just each indicator governs about a third of the equity position of our portfolio.
So when the market is doing well and the risk of a crash is low according to our research, all three buy and sell indicators will be positive at the same time, and we will be fully invested in our equity positions. In fact, in some of our more growth-oriented models, we don't do this in every model, but in some of our more growth-oriented models, in these seasons of potential opportunity where all three indicators are positive, we will actually increase stock exposure above our baseline levels of 60%, and we'll raise it all the way to 100%. And we call this pedal to the metal. And currently we are in this phase right now. And we don't just invest a little bit into everything. We diversify by investing only into areas and asset classes that, based on our research, are gaining momentum and strength. And likewise, avoiding investing into areas that are deteriorating. For example, right now we are currently in all large cap type of stocks. We're avoiding small caps, mid caps, as they're just not keeping up in momentum and strength versus the large caps. And as the trend changes, so does our reaction and allocations.
When you said pedal to the metal, it's like that F1 movie. I think we're like sometimes an F1 car, and then sometimes we just want to park it on the side of the road when it's like a storm. You don't want to crash. And that's where we monitor our investments every day. So if that storm's brewing and the market and the risk is increasing, we'll start to see those three indicators going negative. And typically they happen in a staggered manner where we'll start slowly getting out of the market and go deeper and heavier into defensive areas. Sometimes it's even cash, sometimes it's bonds. And at some point, if the storm gets bad enough, like I was saying, you got to park. You don't want to keep driving in this storm. You got to get out of the market. And again, we are working with predominantly retirees and people very near retirement, pre-retirees. And we understand that if you are in retirement or near retirement, you have an entire different set of rules. You're not a 25-year-old with a limited time horizon, with a long time horizon. You've got this limited time horizon. You don't have forever to sit on your money after a market crashes and just pray it rebounds. And what makes it even worse is if you're taking income out of your portfolio to live off of in retirement, right? Many people, that's why you have your retirement savings. So if a market crashes and you're taking income, that has an even more devastating impact. And then, obviously, if the market crashes bad enough, you may never fully recover for it. We use the concept, it's like forced to eat your seed corn, leaving less to grow for those next harvests.
No doubt. And by the way, I can't stress this enough. We are not perma-bears or ones to constantly peddle fear about the market. It's actually quite the opposite. Most of the time, the market goes up. And that's why, like we mentioned earlier, in some of our growth-oriented models, we will actually increase stock exposure all the way up to 100% when our research indicates it's the right time and opportunity. So contrast that to a traditional buy and hold, just ride it out concept, which is how the vast majority of people have their money managed. That approach is based on something called modern portfolio theory. And Matt and I always joke about how it's like an oxymoron, modern portfolio theory, since it has the word modern in it, and it came out in the 1950s. So it basically believes you just diversify into a bunch of various asset classes and investments, and you just leave it alone and just ride things out. No matter how good the market is doing or how bad, you just sit tight and don't make any changes.
I always joke when we would do our workshops that modern portfolio theory was invented before the hula hoop. So how modern is that? And really, the problem with this approach with buy and hold is there is no defense against market crashes. They're just saying diversify and time. And that, in many cases can work if you've got a very long time horizon. But what we often witness during market crashes is that these asset classes that are supposed to diversify your portfolio become even more positively correlated, and now everything's going down together. at the same time. Stocks and bonds, like we've witnessed it recently, they can all go down at the same time. And if you get a terrible recessionary market crash like in '08, it can take years for the crash to bottom out and even more years for you to finally recover from it. And all that lost time, we feel that's too risky for retirees. You're dealing with a limited time horizon. And of course, you might need income out of your portfolio. So if you're out there, if you want to have more details on a strategy like this, give us a call at 847-780-2980 or go to bnwealth.com and schedule an appointment to come see us.
And by the way, before we have to break, we have some exciting news. We are having our first Client Appreciation Gala this September, a night to say thank you to the families we serve. You want to be there. It's going to be on September 26th. Call our office to explore becoming a client. And the phone number is 847-780-2980 or go to bnwealth.com.
We'll be right back. Welcome back. Thank you for tuning in. This is the Money Hour Radio, a show where we try and help you grow your money, pay less taxes, and have a beautiful retirement. And what's better than that? But before the break, we were talking about we're back. We're with AM 560, our home for the past decade. And of course, unfortunately, we had to take a brief hiatus. But during that time, we were doing a lot of hard work behind the scenes, putting some things together. And earlier this year, we launched our own independent, comprehensive financial wealth management firm. It's called Barzideh and Nadeau Wealth Management. We're local. We're right here in Barrington, Illinois. We bring with us over 40 years of combined experience.
Yeah, I've been working 38 years. Matt's only got 2 years of experience.
Yeah, you don't look it, though. Man, you look good.
No, that means we bring the same passion, expertise, and integrity that you've come to expect from us with one key difference: complete independence. Our fiduciary obligation of putting clients first is the foundation of our company philosophy, and it guides every decision that we make. And as an independent firm, we truly have the freedom to focus solely on you, not some corporation. And we're confident that our listeners will soon hear that and realize that we're not just another financial firm. We truly do operate differently in many ways. I want to talk about purpose a little bit because purpose is important to us. Our company motto is do great work, have fun, and give back. And the give back part is very important to us. We believe that success is more meaningful when it's shared. And we don't just talk about purpose. We want to invest in your purpose with you.
Yeah, it's really important to us that, not only does it make it unique to us, but we also have our own beliefs and values that we are very passionate about. And so if you're passionate about faith-based work or community programs, global impact, there's a way of us co-creating a financial plan that reflects your values while we help support your cause with you. So one of the things it's important for you to know out there, if you're not one of our clients, if you never heard this, is if you do become one of our clients, and let's say you're a regular tither, you're a faithful giver to some sort of charities out there, let us know. Because we're going to have a program coming out soon where we will actually match your donation up to 10% of the fees you pay to our firm each year. And it's a way for us to give back and match that cause that's important to you. So now it is important. It does need to be an official charity, an official 501c3 charity. Can't just write a check to me or Ben and call that charity. But the beauty is we all benefit, right? You, us, your cause. It's like a win-win-win. And for us, if we can continue to create relationships and grow a client base who share our values and vision, we just find that is so much more rewarding. And so we wanted to let all of our radio listeners know of this opportunity that's coming out for our clients.
No doubt. We're so excited about that. So now let's talk about the One Big Beautiful Bill Act. And as we unpack it some more, like we have the last few weeks, today I want to talk about estate planning updates in the law and Illinois death taxes. And we want to give a heads up, in 2 weeks from now, we're actually going to have Ken Piercy from Piercy & Associates an esteemed estate planning firm that we work with right here in Barrington. And he's going to come on our show and go into a deeper analysis of this, talk a little bit more about the landscape and estate planning and things you should be aware of. So we don't want to steal his thunder by any means, but we do want to speak a little bit about some updates, just broad type of estate planning news and updates in Illinois death taxes. And you've heard of the adage in life about how the only thing guaranteed are death and taxes, right? Well, you can actually have both at the same time. And the good news is that most people will not. But here's how death taxes work and the updates in the one big, beautiful bill. And we will also discuss Illinois death taxes and how they differ from the federal death taxes. So on the federal level, every American gets this giant, big tax deduction against death taxes. And the big, beautiful bill updated the federal death tax threshold to $15 million a person or $30 million for a couple. So that means unless your estate is larger than $30 million as a married couple, your heirs won't owe any death taxes. And Matt's happy about that because he's actually in
Barely.
So as long as your net worth is under $30 million, your heirs won't owe any death taxes. Anything above that level, which by the way, probably a good problem to have if you have more money than that. But anything above that $30 million will get hit with a death tax. And obviously that means 99% of the public won't have to deal with this, since hardly anyone has a net worth that size.
Yeah, if you do have a net worth that's this size, that's where you need a specialist like Ken Piercy, who'll be coming on in a couple weeks, because there's strategies out there that a good estate planning attorney working with a good financial planning firm can help you deal with it. So the thing that really is a bigger, trickier situation is when we're dealing with the state level, because each state has their own rules, and some states actually have a death tax in addition to this potential federal death tax. And the thresholds for states that do this are different. So let's focus on our great state of Illinois. Yep, we're one of them that has a death tax. And it is, instead of this giant $30 million if you're a married couple, it is a $4 million net worth that you're set at. And there is no portability. A husband and wife can't combine it and double it like you can at the federal level. So that's it, $4 million. And then let's get a little crazy with it. If your estate is $1 above the $4 million threshold, all of it gets hit with death tax, not just the dollar amount above the $4 million. So as you can imagine, that can get costly because the progressive tax, yes, it starts at 4%, but it very quickly can get as high as 16%. So as a just real simple example, as a rough estimate, a $6 million estate in Illinois, if you don't do any of the proper planning, that could sock your heirs for roughly $550,000 in death taxes. That's like a 9% hit that you could avoid with proper planning.
And that's money that should be going to your heirs, but would go to the state of Illinois. So if your net worth is above this $4 million threshold in Illinois, or you're even anywhere close to it, and you think that at some point you're going to go over that, you need to see an estate planning attorney ASAP and get some work done. You would need what's called a credit shelter trust. Sometimes they call it AB trusts, but it's where the husband and wife, you have your own trust. That way you could shelter up to $8 million together from Illinois death taxes. And by the way, if your net worth is greater than that, which again is a good problem to have, there are other advanced estate planning techniques and concepts that can be used to help shelter a big portion from death taxes.
Yeah, and some of that could be like giving, credit shelter trust. There's different things, like you can do like charitable remainder trust. There's a lot of features out there. We were talking earlier about charitable giving and donations and how that's really important to us. And again, if that's important to you, that's a really good way to give away some of your estate to charities and do some long-term estate planning as well. So there's a lot of solutions out there. You just got to do something about it. Don't just sit there and procrastinate, because It's one of those easy things to not think about or you don't want to think about, but it is important both to you and your heirs to make sure all of this is buttoned up.
No doubt. Well, before we end the show today, we have some very exciting news coming up. At BN Wealth, we've been incredibly fortunate this year to welcome just a large number of clients since our launch earlier this year, many of whom we've had the privilege of working with for years, and of course some new faces too. And to celebrate this milestone, we're hosting our very first Client Appreciation Gala this September, a night to say thank you to the families we serve. So join us for an unforgettable evening of fun, music, mingling, and memories at our California Dreamin' Client Appreciation Gala on Friday, September 26th. You'll enjoy the live music by Sounds of Summer, widely considered one of the best Beach Boys tribute bands in the country. Their music is iconic, timeless, and especially meaningful this year.
Yeah, and we're going to do this at a stunning country club. So we're going to have a wonderful night with dining, dancing, drinks, and it's all in an atmosphere you're just not going to want to miss. I mean, this is an exclusive event open to our clients only, but that's why we're bringing it up now. The good news is you've got plenty of time to explore if you wanted to become one of our clients. So if you want to do that, the first step really is to reach out and schedule a complimentary consultation. So when we do these complimentary consultations, they're not pressure, but we are going to go into a lot of detail with you. We're going to go over your current financial plan, your current financial picture, your goals. We're going to take the time to review your tax return, your estate plan, all of these things tied together and making sure that you're paying as little tax as you're supposed to, whatever you legally have to, you'll do that, but we want to see if there's other opportunities. And we're also going to make sure that we go over your risk tolerance and your investment strategies. We talked a lot about our Advance and Protect process. You'll have a chance to learn more about that as well, where we can see if that would be a good fit. If you're worried about the potential future of this market, right now has been a good time, but you never know what's around the bend. There's opportunity to learn more about it. So,
and then to reiterate again, we're not going to try to sell you an annuity.
That's right. You're not going to come in, and we don't have any commissions. We don't have any annuities. So again, we are just going to give you a free financial checkup to make sure you're okay. Go online to bnwealth.com or call our office at 847-780-2980. We're out of time. Have a great week, and God bless.